Hello.
Hey, this is Casey Stone over at Stone Property Buyers. How are you
You
doing?
doing good?
Well, awesome, awesome. Yeah, I wanted to reach out, connect. I got my teammate mentioned that y'all chatted a little bit, had some questions, and I want to see what I couldn't do to maybe help or paint an accurate picture.
Okay. And my husband is here also too. Rivers.
Perfect, love it. Hi, sir. How you doing?
Hey, good. How are you?
Doing well, doing well. My name is Casey, by the way.
Okay. Rivers.
Nice to meet you.
I guess what our question is, this is all said and done. So we decide, hey, okay, we're gonna sell, right?
Okay.
So at the end, on our credit, how will it look? It will look like we just sold the house, or will it look bad? Because like I was telling her, I would like to basically we really want to downgrade. We want to downgrade, and our children are getting older. So we don't need all that space. We need it, but how can I say? And we want to go into, so when we leave this house, I would like to be moving into my next house, not just we get the money and then that's it. Even though I know that's y'all part and what y'all do, y'all just sell it and that's all. So on our credit, will it look like, will it say in default? How will that look?
Great question. Let me take a step back real quickly, if you don't mind, to kind of frame it here quickly and just go through the process. Because I do know that you're not in a hurry from what I have gathered. You've got a couple of months to make a decision, right? Or to get moved if you want it.
Right.
Is there a reason that you haven't looked at just listing it on the MLS and selling it the retail route with a realtor?
I guess we just don't feel like going through all that. I don't feel like paying nobody's closing costs. I don't feel like doing all that. Like, we don't feel like going through a showing. Because we do need, and like I told her, for the most part, the house is the same. We didn't do anything to it. The only thing is it needs new carpet because this is the same exact carpet from when we bought it from the original owner. They just got it cleaned really good, but at the end of the day, people built the house gonna put in the cheapest carpet possible.
Yeah, right.
And we pulled up the carpet in our bedroom because we was gonna lay we did pull up the bedroom. We did pull it up, and it's just concrete. We're gonna lay tile back in the bedroom, and they had carpet in the bathroom closet. That is it, but as far as the carpet on the floor is the same, and it's just didn't look wrong. We didn't touch none of the other stuff, and it just need repainting. We tried to repaint in our bedroom, in the bedroom door, like black, because that's we were going for like a black trim.
Yeah.
That didn't succeed well. Or in the bathroom, listen, you understand? It was working, so that's it. But as far as everything else, everything looks the same in the house.
Gotcha.
We were just looking for a quicker turnaround because we watched our neighbor sell his house. It seemed like a strenuous process, and it went through a lot. So we just try to see if there was a quicker turnaround.
Right. And you know what? It's always smart to just consider all options. You've got the luxury of time a little bit where you don't have to be done in 2 weeks. So it's smart to consider options and then pro con weigh it out and see what works best. I think that's just smart due diligence. I know that the loan's behind a little bit, but we haven't gotten to a foreclosure process yet, right?
Oh no, and I don't plan on going through that. No.
Okay.
Yeah, we had a dip in the income, but that's coming back up, and we're only 2 payments behind. Well, really not just yet, but we will be making a payment next week.
Gotcha.
And we're also in the process of talking with the bank too.
Okay.
Our mortgage.
Yep. Well, you're problem solving.
I know she did talk to us about that, but she said that they would pay that, and because I know in the process of y'all paying that, y'all would like bring it current. Y'all would take that out of the money that y'all would be paying us, right?
Right. So the way that would work, that's a great segue here. So thank you for that. So the way that the process kind of lays out, if we were to jump in and get involved with it, is that we would schedule a closing. We do all the paperwork, I'll scribble on it, get it to the title company, schedule a closing kind of whenever you need. We sometimes contract a week or two in advance if people need to close, and sometimes it's 3 months in front of them needing to close. We get our ducks in a row, and then we're kind of prepared to jump whenever y'all are ready. So it's pretty flexible as far as timing for when the closing would take place and how that structure is. It is just like you said, you know, whatever we buy, we would frequently reinstate the loan if they are behind. But you're right, that does come out of our total purchase price, right? So say the numbers dictate that we can only pay X total, then other expenses like an arrearage of the mortgage or the HOA or a solar panel lien that pops up from title or whatever it might be has to come out of that same purchase number. And so usually it is best when the loan is current, because then we're not paying money that could go to you. We're not paying that towards the lender for late fees and interest and Well, if it does get to foreclosure, and we do a lot of properties about to go to auction, literally the week before they go to auction, and money that I could have paid that family had they contacted us 2 months ago, now has to go to attorneys at the bank to stop the foreclosure process. So it is best to have that current and up to date, just so I can get more to y'all than to a lender. So yes, your statement was accurate, and a little bit to it. So it's obviously something that we have to have numbers that dictate the whole scenario, what we can do and what would make the most sense, and what we call the ARV, or what the repaired value would be of the home after we were to come in and do new carpeting throughout. There's always a little bit of sheetrock work you need to play with and repainting, and because anytime you're yeah, little stuff, part of the game. Sometimes you can even cover a little bit of that with paint. We had to make it look pretty, because I don't know if you've gone to look at others that are for sale in the neighborhood, because that's kind of what we have to go look at. What is a house of similar size, similar makeup?
I did. I've looked on HAR and people that sell it around, and they're selling a house, especially with my 5-bedroom game room. They're selling a house in the 300,000s.
Yeah.
And then once that, like next door to me, he was trying to sell his house for like 260,000, and I'm like, if he's trying to sell for 260, I know our house. But a lot of them are selling for like 300,000.
Yeah.
Because they're growing in this area and they're building.
A couple of thoughts to the equation here. One is new builds are actually not a great thing right in the area, because if there's a new house coming up right down the street, a family moving in the area would always rather go get a new build house for the same dollar than a house that's 10 years old.
That's a new build. I'm talking about like around here, it seemed like it started off like dirt road. All we see was a gas station at the time, and we got a CVS.
Yeah.
So now we put in a fire station, police station, things like that.
Right.
I live in the part where these houses are already here.
Mm-hmm.
It was built in 2013.
Okay.
So,
yeah, I saw that. And that's awesome. And that's relatively new, which is nice. I mean, you're kind of middle ground where not through the life of the roof yet, or the HVAC and things. They're 2 years from needing service replacement, things like that, most likely, which is always a hopeful scenario. And do keep in mind, when you're looking at HAR or Zillow or any of those places, Texas is a little bit different than a lot of other states. We are a non-disclosure state for our real estate. So when a house sells, we don't actually publish the sell price. And so the price that you see on those websites, unless you're logged in as a realtor on the MLS and running full comp, you're looking at what somebody, we call it their wishing price, or they're hopeful that they sell it at kind of number. And to be honest with you, I see some of those listed at 300. I see the one right next to y'all. They had a recent price drop a little bit on it, which is pretty much par for the course right now. We're seeing, with interest rates as high as they are, houses just sit. Your same house at about that price point on a current loan mortgage rate is probably going to be about $500 more a month for a new family to buy it, which is why the rates are up. They're doing that to bring down inflation, which means the price of goods have to go higher. So that's why they're slowing the market. I mentioned that just to illustrate how, because of the high interest rates, houses sitting on the market are taking 3-4 months to get moved. That one next to you has been there for 2 months, and I don't see any offers, and I've seen some price drops.
Right. And that's what I want to go through.
Right. And the showings and having to have the house beautiful at all steps. Yeah, completely.
Because I just know when we went through to buy the house, and it was like, oh, well, we want this redone. I just didn't. We don't want to go through that.
No.
People who had the house, she was really nice. Like, it wasn't an issue. Like, she paid the HOA up for a whole year. Insurance on the house, she paid that up for a whole year. Like, she was really.
Yeah. Wow. You got a unicorn seller.
Yeah, we did. I can't lie.
Yeah, that's awesome. And that's nice to have. Yeah, and you're 100% right yet again. If you go sell in the retail market, not only is it have a whole time involved with it, but the concessions come into play. They're going to say, hey, well, my insurance adjuster came out and said the roof is good, but it only has 5 years left. I'd like to get $7,500 off because I'm going to have to replace it, or all that kind of stuff. Like, that's what you deal with when you go in the retail market. 2 years ago, it was a seller market, right? And so houses were moving super fast. Things were flying around. And people didn't do concessions because they were just willing to buy the house. They wanted somewhere. Now that it's a buyer market, that power has swung over to the other. The pendulum has moved. And so the buyer now is the one kind of dictating, you need to incentivize me with the price, or I'm just going to go to the next house, because it is a high inventory of homes for them to go through. And so you're totally right in all that assessment. So now I want to go and answer your question you brought up a minute ago about the loan. So what we typically do, and the way that we're able to try to offer as much as possible, is that we don't do what a typical investor does. So a typical real estate investor, they're trying to do a flip, right? And so the way that their math works, I'm going to use a hypothetical. Let's say that there's a house worth $100,000. It's got new roof, paint, flooring, carpet, HVAC, electrical, plumbing, the flux capacitor is up to code. Everything is perfect. I'm a Back to the Future fan. I kind of dated myself there a little bit, but everything is great in the home, right? That house is worth 100. An investor is going to come in. They're going to typically offer 70% that value minus the dollar amount that they think it takes to do the repairs. So if they estimate that it's $15,000 to get up to that 100, they would go from 100 down to 70, take out 15 and offer 55 cash. That's how a cash offer works. Have to hear a question?
Oh, no, I'm just saying,
Yeah, that's how they do it. And the really hot market, a year and a half, 2 years ago, instead of being at 70, they would go up to 77, 78, maybe up to 80% because they were counting on appreciation to help offset that. Now, they've gone the other way. They're really moving a little bit towards 65, 63 kind of frame. I was talking to a guy yesterday. He said he always has 55. I'm like, that's crazy. And the reason that they do that, the reason they have to have that drop is that their closing costs still have to be paid when you buy it. We still have to go through a title and buy title insurance and inspections, appraisals, and all that hoopla. The investor is also covering that when they go resell it. They are going to pay, because on average, when you sell in the retail market, you pay about 10% the property value in closing costs. 6% to realtors, and then the inspections, appraisals, title insurance, closing escrows, funding fees, all this stuff. It averages 10 to 12%. So they have to account for that. They also have a little bit of a wiggle room there in case they misappropriated the repairs, they underestimated what repairs might be, and then they hope to have a return on their job and their work. So that's why they typically do that. That's not what we do. I used to do that many moons ago. That's not what our structure is anymore. What we like to do now is try to go ahead and take over the payments on the existing loan that you have in place. Because a big part of the reason I forgot to mention why they drop down that 70% is the cost of financing. They get what's called a hard money loan. Super expensive, and I'm talking 14% and 2 or 3 points kind of price for them to go get a loan in order to do this. Well, for me, we're in the long-term game. We're not a flipper that's coming in here to just flip it. Because honestly, your house is in too good a shape for a flipper to do anything with. You're too pretty, we'd call it. And so most people would tell you, we're not an answer. We've been able to do in our last 10 or so years of perfecting this is where we take the loan that you have, we come in and start making the payments on that loan moving forward. We close at a title company. We take over the deed. We get filed as the owner at the county office. So we're paying the taxes. We get new insurance put in place that has us listed as the primary insured. And you have to be listed as an additional insured because we submit that to the lender. Your lender will see that insurance policy and they want to make sure that you're listed, and knowing how to do these things appropriately and accurately really is paramount to make sure that it all works out right. But that's how we go about doing it. It doesn't make a whole lot of sense for me to go get a new bank loan just to pay off your bank loan, because then people making money there are the banks and not you. So that's how we typically structure it. And now 30 minutes into our conversation, I'm going to answer your first question. I just want you to have some framework around it. But your question about how it affects your ability to buy a home. Most important, great question. So what happens? Let's say y'all are looking to buy a home right away, right? Not down the road.
I just know that when we leave out of this house, I want to be moving into another house. Yes.
Okay.
I don't want to go stay in a hotel, be looking, or get an apartment for a couple. No. I want to go into another house.
Right.
And I would like to use the money that we profit from this to put down on the next house.
That makes sense. To go over that, the way that loan works, most people don't realize is that you can have a lot of different mortgages out in your name. I personally have, I think, 4. The ability to hold multiple loans isn't the problem. You mentioned credit score. It actually helps your credit score because if you pay off a mortgage, the bank knows, and the credit agencies rather, they know that you're not maintaining the debt, you just had to pay it off because you sold it. Because your credit score, it's actually an ability to maintain ongoing payments and handle the debt versus just paying it off. But what it does affect is your DTI, your debt to income ratio. And so that's where having another mortgage comes into play and how it has an impact on the ability to get a new loan. Most families that I'm working with in this scenario, we're usually getting their loan current because they're about to go to auction, like I mentioned. And there's no way they could get a loan if we didn't. We didn't do that because they'd destroy their credit. But down the road, when they go to get a new loan, that lender's going to say, hey, I see that loan back on Turquoise Meadow and that one, is still there. Well, what's going on? You say, well, I sold that property subject to the financing, and there's a third party that's servicing that debt. And we work with a loan servicing company that can provide the documentation, both showing that they're the ones paying on it and that it's not coming out of your accounts, it's coming out of our account. What they do, the lender, and all lenders are different. Not all lenders look at credit applications the same. You can go to 5 lenders with the same application, and you're gonna get like 4 different quotes. And so they're all a little bit different, but on average, I look at that old debt at about 25 to 30% of that debt amount affecting your DTI. because they look at it kind of like it was a rental. And so they say, okay, I see that 200 that you have out there, and I know that it is being serviced by another party, and you got income, or someone else is handling the note, making the payment, and so we're going to count about 25% that's your DTI. So about 50,000 of that outstanding would apply to your DTI. And so you would take that, let's say that your next house you're buying is a little bit smaller because you're downsizing, and let's say that total purchase price, I don't know, do you have a number in mind right now?
It's more than this house was.
He said 7 million, didn't he?
He won't about this the same. I would just say 200,000.
Okay.
I don't know.
Yeah, and you got to think about this a second ago, that it's a buyer market. You're also going to be wearing a buyer hat, so you can be more negotiable. Do have that part as well. It's working towards you on the other side of a transaction. Let's just say it's a 200,000 house. What they're going to do is that they're going to take that number and they're going to figure out what a monthly payment on the 200 is. And I'm just doing some math here on the back end through a calculator. So about 15, about 2,000. So they would want to see about a monthly income of about 5,500 between the two of y'all for about a 250 debt. When they add those numbers together, they get the DTI. So how much debt to the income? And they want that monthly ratio should be under a 45 to 50%. The lower it is, the better, but they don't really want to go over 45 or 50 because then over half of your monthly income is going in their mind as a staying in debt. That's typically how that math works out. I can say in the hundreds of notes and that we've taken over and that we've been managing the payments on, I've only had one family not qualify for a loan later, but she wasn't paying her car payment, and so it was going to be inevitable anyways. The rule of thumb or the old ways of thinking is that if you would qualify for a new loan without the old one in place, the old one isn't going to prevent you, because in general, that's kind of the idea. I can walk you through how I did that math, and just to tell you real quickly, I told you that we're not a flipper, and that's not what we
just take over the loan.
We take over the loan and we hold the property long term. And so we actually then provide financing to a new family that doesn't qualify for a bank loan and help them get into a home and to be a homeowner. My other hat that I wear is that we do lending on homes. And so very familiar with how the DTIs work and how those percentages and that math plays out, because I have to do it.
Okay.
So we're very comfortable with that. But that's the general thought to it. It does stay on.
Usually work with people who you take loans from and help them find another house.
I'm always there to help. Help can be a broad term. Help in the fact of showing a new lender that we're handling it, or that we're making those payments, that we did a subject transaction, writing all that docs, without a doubt. Because I think that's something that we pick up a little responsibility on in helping to demonstrate to a potential lender how we're managing the debt that's in someone else's name. In the years I've been in, as mentioned, I've only had one person not get qualified, but we've had a lot of people that reach out 5-10 years down the road, and they're like, hey, I'm now getting another loan. I don't have any of my documents anymore because I burned them all or whatever. We're able to provide all that. Always there's an option, whether you're buying a home now or, again, 9 years from now, and you want to get another property down the road. Either way, we're there, and the loan servicer is there, is that third party that keeps also all the documents and has a lot of that paperwork in place and ready to go. A lot of food for thought. And I'll be honest, other things I like to talk through when we're talking about keeping a loan in place, one is called the due on sale clause. I like talking through the risks, the benefits, and it fits for a lot of families and it doesn't fit for some. I'm in no pushy situation where you got to do it this way. It fits well for some and some it doesn't. I don't know your current DTI or credit scores and all those other variables that come into play on qualifying for another loan.
Okay.
Typically, it's a little bit slower, harder to get a new loan right out of the gate. But again, most people that I'm working with, they were going through a foreclosure a week ago, so they're not getting one anyways. It's a little bit apple to oranges in that regard, but because your situation's a little bit different.
Yeah, because we're not in foreclosure.
Right, for sure. And and just to throw it out there, have y'all thought about, I know putting it on the MLS is an obvious concern with the timing and having new showings and the cosmetic work you'd have to do and the concessions and all that. What about making it a rental? Have y'all strategized through that as an option?
Yeah, we have thought about it, because we have to take on the whole rental thing. They don't want nobody coming in and tearing it up. Yeah, we've thought about it, because I'm sure I even wanted to do an Airbnb.
Yeah.
I think here they don't approve of that. They rather you rent it than lease it out than to do an Airbnb.
Yeah, I'll tell you.
Now, so basically, at this point, so to tie this all up, this situation would have been better for us if we were in foreclosure status, basically.
I wouldn't say that. I wouldn't restrict it to that idea completely. I definitely have helped a lot of families. A similar scenario, or they're just relocating for job work or what have you. The ability to buy a new home is something that I would want to think through and how that would work, and maybe even start that process doing the shopping around and see what that looks like. The other thing that I do need to think through is that we're looking at the number side of it as well. The 300 number is a wishing number on the MLS that people are listing them at, knowing that it needs some work, cosmetic stuff here and there. Do y'all really think that's the best overall number that y'all can come up with that would work for y'all?
So you think that's too high or too low?
Too high, because if it were to go on the MLS at that, you're going to spend at least 10% even just in closing costs, right? You would walk with maybe 270, and then you would have repairs, let's say 5 to 7, so now you're at 263, and then 2 or 3 months of holding costs, you're at 260. Like, and it just starts whittling out quicker than it feels like it would.
That's what I'm saying, because I know that we have to put, some money into the house to fixing it up, to make it more presentable for somebody to come in and purchase it. And really, like I said, it's just the paint and the carpet.
Yeah.
I would actually, instead of doing carpet, I would just try to get some tile put down, have a cleaning crew come in and just do a deep cleaning, because really, that's all it needs. It don't need nothing extra.
Yeah.
We haven't lived in the house that long. We didn't tear it up and even with the 4 kids, we still they're older.
Yeah.
And I guess that's our situation, because we want to move, but we just want to get the most. And I understand what y'all do, because at the end of the day, y'all want to get the most for y'all money.
We obviously, want to get paid for work, so like anybody wants to get paid going to work. And so that's all more than understandable. And I'll be honest, I'm looking at the problem too is that at 300, realistically, if you were to sell for 300, you'd probably walk with about 260.
That would be good, because
60
would be really good, because we'll recuperate what we put into the house.
Yeah.
That would be really, really good. That's selling it on our own.
Right. Let me ask you, I'm seeing an interest of 5.6. Does that sound right to you?
Yeah.
Okay. To be honest, my goal is to always provide honest feedback and opinion.
I like that.
I work with a lot of families, and we don't buy every home we talk to, and I'm more than happy with that. If I were being honest about it, with the 5.6, it's a little bit,
that's high.
It's a little high, which means that my cash on cash or my return is lower if I'm doing an arbitrage on the rate, which means I have to account for that in my number. Because you have time is reason number 1. And reason 2, that you have slightly higher loan on it now, and that you have needing to buy a property lickety split. I would probably say, what I would tell you, to go list it on the MLS, see if you can't find somebody. We're coming into the hot months. You might get that family that just absolutely loves that color that you pick or what have you. You never know. People win the lottery, right? Yeah. I see a 3 to 6 month kind of time frame. I would rather you have exhausted that option and know if that does or doesn't fly before you look at something else. Just because I feel like you're one of the bigger in the area. It's harder when you're an anomaly, right? When you're smaller than everybody else, or you're bigger than everybody else. But sometimes that standing out from the competition goes to something unique can play to your favor. I'm not seeing a lot of other 5.3s. That might be something that plays to your advantage. And I see similar square footage that are 4.3. So there's that family out there that wants that extra bedroom. So to be honest,
Have you looked at our house on the website? Like, have you have you researched and pulled it up?
Well, actually, when y'all were sleeping last night, I walked through and took some photos. And thank you for laughing. Really worried that was going to sound super weird. There's not a lot. Again, being a non-disclosure state, once a house sells, a lot of realtors pull down a lot of data. I haven't gone into the actual MLS yet, but I can see some pictures and some details. I think that you're in a spot where time is your friend, not your enemy. And so I would use that to my advantage.
And I think you're right.
I would encourage you to do that. And then let's say that 3 months down the road, nothing has moved, it hasn't gone in the direction that you'd like, then maybe we can jump in and have another answer. But you don't need that other answer yet. You're not in that pickle, and you've got a solution that sounds like to the couple of small months that's behind. That's not a big deal. You're going to get that fixed. And I think you guys have a good strategy to it, in my mind.
I think that, and we appreciate your advice and your honesty. I think that's a big thing, just being honest and, just straightforward. Like, look, y'all know the situation you're going through this.
I'm here to solve problems, not create problems. I appreciate hearing that. And a lot of people in my industry have a reputation that they've earned, and I will try to work hard to earn a different one. You can be friends and do everything ethically, and everybody can still win. The world is kind of built. The military kind of drilled that in my mind, I guess. But I'm sorry?
And we appreciate that.
Well, I appreciate getting to chat. This is my cell, so if you have questions, you can tell I like to talk, but I am on the phone a lot, so texting is sometimes easier for me.
Okay.
If you want to just shoot me a text or a thought or something, I'm always there to kind of be a resource.
I will, and I really, really appreciate you. Thank you so much.
Not a problem.
Thank you.
Y'all have a good one, and I hope y'all didn't get too much rain like we all did yesterday.
No, it's sunny outside now.
Good.
Thank you, honey. You have a good day.
You too, man.
All
Take
right,
care.
thank you.
Yes, sir. Take care. Bye-bye.
Bye-bye.
If you have questions about real estate investing, owner financing, or any other aspects, don't hesitate to shoot us a message or make a comment on a video. Don't forget to subscribe to our YouTube channel and follow us on the other social platforms to stay updated on the ever-changing real estate market. Happy real estate investing!